Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Thursday, January 15th. Firstly to the S&P 500, and here we see a fairly large black body candle today, and price action rejected from the resistance at the 2019 level, which we identified yesterday as a very important level, the market testing up to there for the previous day's trading. Being rejected from there in a minor way, and the previous day's trading the buyers had control of the market, and today they've lost that control to the sellers. We have a much larger black body than we've seen for a couple of trading days, and it suggests that the sellers have regained some of that downside momentum that they found a few trading periods ago as the market was testing down through the Ichimoku, or just above the Ichimoku cloud. With this strong sell-off today, it is now the fourth consecutive trading day that the market's been trading within the cloud, and suggesting that we have a fairly well established neutral market in that longer term time frame now. That very strong bullish bias that we had previously is no longer in the market. Now, with the sellers taking control down below the 2000 level, it does suggest that there is a possibility of the market trading to lower levels. But we do have some support just down below where we've closed near the low of the previous candle, which is at 1988, and we can see for the past few occasions that we've tested down to that level, we've seen some good rejection coming in. So that is going to be a bit of a benchmark for the sellers for the next day's trading. If the sellers are strong enough to breach that area, we could quickly see the market test down to the 1968 level. Now, just one thing to watch for here is that Kijun-sen is still pointing flat, and whilst it's pointing flat, there is still a possibility of price action being attracted back towards there. But at the moment, we do have a bearish market in the medium and fast term time frames by trading below the Kijun-sen and the Tenkan-sen. That's the pink indicator and the green indicator. And the Chikou span here is below the corresponding price action, so it's confirming the negative momentum that we've got in the market and confirming the bearishness in those faster time frames. Now, even though we've seen the sellers take control of this market, we technically have had a change of trend today. So the trend has changed to the upside. So this candle has actually made a higher high and a higher low. And the problem here obviously is that the buyers have lost any commitment that they had when they were trading up here at higher levels, and the sellers have shown strong commitment by taking the market down below 2000. So there's a very good likelihood of us seeing a change of trend back to the downside. Just taking a quick look here at the bands, and here we've seen the bearish breakout down below the lower band that sets the market up for that new downtrending price action. There is a possibility of the move continuing if we see a very strong bearish candle to the downside, and really I'd like to see the market breach the swing low here around the 1971-1972 level. Then it would confirm that we have a new very strong negative bias in this market. One of the problems here, however, is that the bands were quite wide when we saw the breakout, and what we like to see is the breakout from the bands when they're squeezed up, and it means with the bands being wide at the moment that we still have relatively high volatility, and that's probably due to this uptrending action, very strong downtrending price action, solid uptrending price action for a couple of days, and then a strong downtrend in place. So quite a bit of volatility still in this market. So just raises some doubt about whether the trend will be able to continue to the downside and breach the swing low here around this 1972-1971 level. Moving next to the Dow 30, and here we see a fairly solid black body candle closing down at the lows, as opposed to the market closing around the mid-range level for the previous two trading days. So the sellers have taken control here, and it does suggest a strong possibility of the market trading lower. We have seen the sellers breach this 17,350 level of previous support, and a test here will be the swing lows here around these candles, roughly about the 17,264 region. But as with the S&P 500, we have a bearish market in the faster term time frame supported by the Chikou span, but neutral in the longer term time frame by trading within the Ichimoku cloud. One thing to look at here is the reduction in the size of the black body, suggesting that net momentum is not as great as it was previously. So that does cause some concern and suggest that we could see some buying coming in around these levels. But we can't preempt the market. Let's wait and see how the market tests down to these levels if we do trade down in that region. Similar type of trading activity with the bands here, and we see the market trading in a bearish manner outside of the lower band, at the lower band holding as resistance as the market attempted to rally, and very strong price rejection from there. Now what we want to see is that strong follow through. We'd like to see the market breach these lows, and the strong follow through would confirm a very strong negative bias in this market and suggest that there is potential for the market to continue trading lower. Moving next to the Nasdaq 100, and here we see much more solid selling in this market than we've seen in the previous. And the body of this candle is much larger. It's a black body as with the others, but very much larger than the others, and much larger than those that we've seen in the recent past. And it suggests that there has been very solid negative momentum to the downside between the open and the close, and suggesting that with the sellers taking strong control of the market, showing strong commitment, we could see the market trade lower. Now we have seen the 4089 level hold up as support, and this level has been tested on 2 occasions in the recent past, and we've seen strong buying coming in off this level. So some very important trading coming up for tomorrow around this 4089 level, as we may have with the small window that was opened up previously. So if the market does breach 4089, the window between roughly 4062 and roughly about 4054 may hold as solid support. But as with the other markets, we have a bearish market in the faster term timeframes, supported by the Chica span, with the market testing to the Tenkan-sen indicator here today and selling off very strongly from there, suggesting a fairly well established fast term downtrend in place, and a fairly strong one, with a neutral market in the medium term timeframe by trading within the Ichimoku cloud. Moving next to the bands here with the Nasdaq 100, and this bearish close down below the lower band sets the market up perfectly for a new medium-term downtrending phase, a very strong one if we can see that confirmed follow-through in a bearish manner. We'd like to see the market breach this support level, obviously, in a bearish manner to give much more confidence in this trend developing further to the downside. If we do see buyers coming into the market, potential resistance around the lower band at 4152. And finally to the Russell 2000, and here we see quite a similar type of candle that we've seen with the Nasdaq 100. So the Nasdaq 100 and the Russell 2000 are a little bit out of step with the S&P and the Dow 30, whereas we have a fairly large black body candle and a much larger black body than we've seen for some time. So it suggests that we've had some very, very solid selling with the Russell 2000 as well. Sellers taking control, showing strong commitment. Very real possibility of the Russell 2000 testing down to the 1147 level of previous support, and even perhaps beyond there down to around the swing low about 1134. With the market closing within the cloud, we now have establishment of a neutral market in big picture terms, whereas we maintain price action up above the Ichimoku cloud, giving us a bullish market previously. And it did suggest that whilst we were trading up above there still was hope for the buyers to come back into the market and trade to higher levels. But with the market trading within the cloud, there is some doubt about whether the buyers will be able to break out through the top of the cloud. Now for today's trading, we've seen the market be rejected from the confluence of resistance at the Kijun-sen and Tenkan-sen, roughly about that 1176, 1177 region, and that was an important area of support recently. So this shift in the action of the Tenkan-sen and Kijun-sen from previous support to resistance may now be important. And as with the other markets, we've seen the breakout down below the bottom band in a solid bearish manner. What we want to see now is strong bearish follow through to confirm the breakout and suggest that we could see development of a new strong medium term downtrend in place. Now just watching any potential rally to find resistance at the lower band at 1173.